What's going on, guys? Welcome back to another video. So we are going to be talking a little bit about AMC in this video. We're going to be talking a little bit about the charts, AMC and APE, the combination of the two prices. And speaking about APE, again, guys, if you did actually watch the video from yesterday, you guys would know I didn't actually dump any of my APE. I was still making the decision because there were a lot of thoughts kind of being thrown around left and right. And I did want to kind of showcase my thoughts to everybody in that video, kind of talking out, well, there's one side of everything that's going on, and then there's the other side. So at this point, haven't sold any APE. I don't know how that really started. But again, we do have to break everything down here and also talk about this one institution that has gone short on AMC and then long on APE, because there is something interesting going on here in this short seller. We all kind of know who he is. So it's going to be a very interesting to go over. Now, the other thing is that it seems that on a lot of brokerages have actually added APE options to their option chains. Now, they're not actually tradable right now. If you guys can go in and see for yourselves, the last time that I checked a couple of minutes ago, there's actually no bid, no ask, nothing's actually happening on the option chain. But if these options do come live, I want to kind of walk you guys through exactly what they could be used for by some people that might be betting against AMC or kind of some other strategies that these large institutions are going to be using. So before we get into all of that information, if you guys do enjoy the information and analysis that I provide for you guys in these videos, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. If you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. Now, very quickly before we get into anything here, I want to give a couple of shout outs here to a couple of people in our Discord over here. We have Not a Hedge Fund having an awesome day over here. We have Kyle over here having an absolutely monster day too. Again, guys, Pythagoras, the most powerful tool that retail investors have access to right now, is now live in here. Invictus is live too. So if you guys are interested in all the live streams, all the curriculum videos, all of the alerts, the charts, the options data, make sure you check out that link down below. But kind of getting into these charts here with AMC and APE, again, the charts haven't necessarily been merged together. And even when you do add together AMC and APE, as we can do right here really quickly, the chart still looks a little bit wonky here. You can actually do this on TradingView, and when you pull this up, there is still this very significant drop that we're seeing here, but the total price of the combination of AMC and APE is still at around $16.72, with APE currently trading at the current time that I'm recording this about $7.06 here. Now, I also kind of want to get into this one institution that is now betting against AMC but going long APE for a very specific reason. Now, when we come over here, why is Jim Chanos betting against red hot AMC stock? Now, when we come down here a little bit to kind of see exactly what his thought process is, functionally, the two securities are the same. Now, that's one of the points that we were bringing up with APE. Some of your value and equity position in AMC has now been transferred over into APE. That's why we saw the significant dip in AMC, because some of that value was getting brought over because APE came out so hot. So functionally, the two securities are the same, and I guess the APEs will be putting pressure on Mr. Aaron if the discount continues to make it freely convertible sooner rather than later. That's most likely not going to happen. B. Riley analyst Eric Wold seems to agree. Wold believes the two classes of equity should be trading at relatively similar prices, which, again, they basically should at this point because they have equal economic value and voting rights. This isn't the first time that Chanos has taken a short position against AMC. In August of last year, he disclosed a short position and scolded retail day traders, warning them that they would be personally responsible for any losses incurred when trading meme stocks. Now, when we're thinking about exactly what Chanos has done here, it makes sense fundamentally to go short AMC and long APE if that's his thesis. But when you think about this right here, you could just go long one or the other, because essentially what he's doing is he's saying that most likely AMC is going to come down, APE is going to come up. So if he's short AMC, long APE, well, there's really no profit potential there unless he's over levered on one side. If he has an overweight position in APE or overweight short position in AMC, there really isn't that much money to be made if his thesis is that APE is down here, AMC is up here, and they're going to come in and balance out here. Yeah, there is technically a little bit of an arbitrage opportunity there, but the biggest arbitrage opportunity is something we can kind of talk about in a different video that has to do with institutions institutions actually coming in and providing AMC with the money in order to pay off their debt and then trying to convert later. This whole situation with Chanos here, it really just kind of serves and it really looks like he's just trying to poke fire at the ape community yet again. Now, the other thing that I want to talk about here is this situation with APE in the options chain. So we've seen this come up, and a lot of people have seen this. They've seen the screenshots floating around. I've seen it on Webull, and I want to go over exactly what this could be used for here. When we're coming over to this Google Doc here, which is actually a copied and paste notice from the SEC, it's just easier so I can highlight things that I think are very important. When we come over here, let me see exactly where this is. A buy right trade is a simultaneous sale of calls in the purchase of the equivalent amount of shares in the underlying stock. Buy rights associated with the activity at issue typically employ deep in the money calls. A married put is the simultaneous purchase of a put in the purchase of an equivalent amount of shares in the underlying stock. When associated with the activity at issue, the married puts typically employ deep in the money puts. Flex options are exchange traded options that have non-standard, customizable contract terms. The main features of flex options compared to standard traded options are the abilities to specify which strike price and options date, etc., etc. But when we come down here, when the quote synthetic position is priced correctly with respect to actual shares, there's no profit potential, potential profit opportunities exist in the market. In other words, being long the quote synthetic position and being short the actual shares normally results in a riskless, fully hedged, profitless position. This position is commonly known as in the industry as a reversal. So when we're looking at this right now, it is possible that options could be used to kind of close out or kick the can down the road with any failed to deliver positions that any of these institutions may have. Now, I know a lot of people have been talking about this T plus 90 situation, and I haven't had time to really kind of dig deep into that. But again, with APE right now, with AMC, the increasing short interest across the board, it is very possible that the failures to deliver will be going up, and they're going to need to deliver shares of APE. But if APE actually comes out with this option chain and we do see this happening, it's very possible that trades like this, these buy right trades, or creating these synthetic long positions through the option chain could occur in order to kind of kick the can down the road with some of these fail to deliver positions when these positions actually fail. Now, when we go a little bit further into this document here, it actually kind of goes through the nitty-gritty of exactly how this would occur. Periodically, securities become hard to borrow, and where there are large and persistent fails to deliver in the security end up on the threshold securities list. These situations give rise to pricing differentials in the options of these securities, and the put-call parity equation may appear out of balance. So that's how they're generating these synthetic long positions to potentially kind of kick the can down the road with these FTD positions. But again, these are things that we know are out there. We've talked about this before, but it's something that I think is very helpful to bring up now with the potential for an APE options chain to actually be coming out. So guys, that is going to wrap up this update on AMC and the whole kind of situation surrounding APE. If you guys did enjoy the information and analysis that I provided for you guys in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who do want to learn. Other than that, guys, I'll see you in the next one. Peace.